is looking at lots of earnings on the calendar. Alan Nuttman is joining us from Agora Financial. If you look at a stock that already had its earnings, Alan, you're looking at Intel, which after a pretty nice run off the lows, has kind of fizzled out since its report. What do you see here?
It backed off, and it was down to the $50 level, and then buyers came in and brought it back to unchanged on Friday after the earnings report. So that was pretty significant. Now, let's talk about the whole market in general. We've been seeing higher highs and higher lows, and we're ready to attack those highs in the S&P, holding above 2,800. So a lot of things are positive, and I want to relay a lesson to you that I've learned, is that to trade what you see. Don't think, because when I think, I get in trouble. So trade what you see, and we're seeing another momentum move in the overall markets, and there's a gap up above at 3,000 in the S&P. So this is a very strong move, and it's all about the money flow, and it's about the money, and we're seeing money continue to come into the marketplace.
Okay, so you've got overall bullish view on stocks. Alan, sounds like you are feeling good about the bounce. Does this mean that we're like breaking through levels that are important to you? I mean, is it the VIX that continues to drop? Do you want to bet on more upside to stocks, or just the fact that we're not going to fall apart and retest the lows like so many were looking for?
Answer is yes and yes. So please take yes for an answer. The VIX now is near 2-month lows. Again, 2,800 is the halfway point in the S&P, and we've been able to maintain above that after a little bit of sideways action last week, a little consolidation, a coiling before it breaks out one more time. You also have the Russell, as you talked about last week. That was your concern, your laggard. It's back up at its new relative highs. But I think there's a lot of positives here. And let's look at Intel. Let's look at that stock. It traded between 45 and 55 to make its bottom base. And then it's consolidated here in the last couple weeks between 55 and 60. Both of those technically target 65, which is a good deal up above. So what I'm looking at is the July 55 call. The July call is going for about 7.5 or 8, so 8 or less. So the break even is not that far away. It's got plenty of time in this position. This option was only $50 more expensive to buy the July versus the June. And to get to your favorite fundamentals, the PE is at 10. Even after the stock is rallied 35%.
Okay, so let's talk here about how specifically to go about your Intel trade. Once again, you're looking to go $4 into the money. I mean, you're spending a good bit on these options when you're that far already into the money. The stock's trading at 59, and you want to buy the calls at 55 strike.
Pivot level, but it's also about using the strategy that I do week in and week out. Let's talk about Nugget. Nugget we did a couple weeks ago. We made 50% profit and 100% profit by buying the in-the-money options, which behave like the underlying stock, but they have a big gain with a modest move in the stock. So that's the game we played that's been successful. You tie up less money, you've got high probability, you're buying good options, and you're going to have a nice, healthy move from just a modest bounce in the stock. We're looking for the stock to get 65, so that's almost a 10% move. If that happens, these options will be $10 in the money, and it'll have a nice, healthy payoff with limited risk.
Yeah, all right. Healthy payoff, limited risk. Looking at July expiry, so you've got some time here until after earnings this morning. Little change and an up market. Alan Nuttman, thanks for the trade. Thanks for the macro talk. As always, Mr. K, Chief Strategist at Agora Financial. When we come back, let's talk bonds. As we mentioned this morning, the 10-year yield is higher. In the context of